we detected an unusual trade worth $40 million on Advanced Micro Devices stock, ticker symbol AMD. But here's what makes this even more interesting. AMD is scheduled to report earnings in a few days on November 4th. So to reduce our exposure to this earnings risk, we started taking profits from our AMD trade to cover our cost basis so that even if the stock pulls back down after earnings, we're still profitable, right alongside our members. Because if you're in our membership, you've already made strong profits from our analysis on AMD. That's because we entered a long bullish trade on this day when we first detected an unusual trade on AMD. That trade turned out to be extremely profitable as we rode this big breakout move higher. So if you missed this trade, here's the video that we shared on our channel showing exactly how we made 315% profit from AMD and how we updated this trade into a risk-free strategy to gain even more than 315% profit if the stock kept moving higher, which it clearly did because AMD stock just hit a new all-time high, giving us even more profits. And so if you want to learn exactly how we did this, so you can apply these same strategies to other stocks, not just AMD, we'll link this video at the top. Make sure to subscribe and hit the notification bell so you don't miss out on these very profitable opportunities. Now, if you're not a member and missed this trade, you might be wondering, is it too late to get in? So let's take a look at the latest data from unusual option activity to see how a wealthy investor is trading AMD now. Is it bullish and buying, expecting the stock to move higher, or bearish and selling, betting on a potential crash? Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, including potential access to earnings data before it's public, giving them an edge to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into the unusual option activity to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, there was unusual option activity on October 30 at 9:57 a.m. at the 7-second mark in these January 16 options at the 240 strike puts. A quantity of 25,000 contracts were being traded at an options price of $16.20 per contract. But remember, options are priced per share, and each options contract controls 100 shares of stock. So to get the actual dollar value, we multiply by 100 or simply move the decimal 2 places to the right. That means each of these contracts cost $1,620. And so to calculate the total cost this wealthy investor spent, we multiply this price per contract by the total number of contracts traded, 25,000. And this equals a total trade cost of approximately $40 million for this unusual option activity. But keep in mind, the earnings report is being released in a few days, and while this unusual trade may appear bearish, this wealthy investor could actually be hedging a bullish stock position with put options, a common way to manage earnings risk. That's why this is considered a higher risk trade in comparison to the trades that we shared on our website. And so, if you want to get access to those lower risk trades with a higher probability of profit, then go to our website. We'll link it up here. And if you join the membership through our website instead of YouTube, you'll also receive additional trade alerts by email because YouTube does not share your email address with us. So if you want more opportunities to profit, make sure to join the membership through our website. Keep in mind that our members also get earlier access to trades like this before anyone else, even before we share with the public. So if you're tired of being late and want more time to act on these opportunities, just head over to our website. where you can see exactly which stocks wealthy investors are trading on Wall Street and when they're doing it, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that said, even though this trade is higher risk, we still took it, but only because we already locked in over 300% profit from our earlier long bullish trade. That means even if the stock pulls back down after earnings, we're still profitable. Now, how did we know these were opening trades and not closing trades? Because if a wealthy investor is closing out contracts or trades, it could mean it's not the right time for us to jump in, since they're getting out of the trade. On the other hand, if a wealthy investor is opening new contracts, it could signal an opportunity for us to start a new trade. This data is very important to confirm because it strengthens our analysis, increasing our probability of profit. So let's check if this wealthy investor is actually opening a new trade and not simply closing a previous trade. To do that, let's first see how many open contracts existed before this unusual trade was made. This is the historical data from October 29th, the day before this unusual option activity happened on October 30. And so, looking at the January 16 options at the 240 strike puts, there were 2,354 open contracts in the open interest. Now, if those 25,000 contracts that were just traded are new opening trades, then the open interest should be more now, adding to these previously opened contracts. So let's check the updated data now on the option chain for these same January 16 options at the 240 strike puts. And we can see here at the 240 strike puts that the open interest has now jumped to over 28,000 open contracts, a significant increase from 2,000 open contracts previously. So this confirms that those 25,000 contracts that were just traded are new opening trades because they were added to the open interest. This is why we always take the extra steps to verify the data at a deeper level. Many other websites and scanners simply flag every high volume options trade as unusual without filtering out closing trades. That's what leads to false signals, wrong conclusions, and unnecessary losses for anyone following unusual option activity. But our deeper analysis filters out those false positives, which is why we consistently find more accurate and profitable trades than other websites. And in this case, our deeper analysis confirmed that this was a new trade opened by a wealthy investor, not a closing trade. So now, with that confirmation, we bought these 240 strike puts and entered the same position marked as POS, which stands for our position, with the green color indicating a buy position. Because based on our deep research across multiple variables and data sets, this wealthy investor bought these 240 strike puts for $1,620 each, which is the same price as we saw earlier on the options time and sales tape. And so when we analyze this trade, we can see here on the risk profile graph, the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line over here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below the zero break-even line as the share price goes up, this trade becomes more negative, more loss. And as the share price goes down, this trade becomes more positive, more profitable. In other words, this trade is going short bearish on AMD stock. We can also confirm that by checking the options Greeks. This trade has a negative delta, which means it's positioned short and bearish. If it was a long bullish trade, we would see a positive delta instead. But keep in mind the risk with this trade. It has a negative theta, which means it loses value over time due to time decay. And that is why you can see here, the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break even on this trade moves lower as time goes on. And so you can see here, even though the put options we bought have a strike price of $240, the stock needs to trade below $223 per share for this trade to be profitable at expiration. But remember, even if the stock does not drop, we already locked in more than 300% profit from our earlier trade because we followed that smart wealthy investor early back on this day before the stock soared to new highs. So if you missed our previous trade, we'll link that video here so you can see exactly how we updated our strategy, which has now made over 315% profit as the stock continued moving higher. For deeper access to our strategies, visit our website. We'll link it here. And until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.